General Motors and Ford, they're not doing any better, Pete. I mean, shares are down hard in GM, down in Ford. Basically, they're saying that demand has been dropping off pretty significantly. Now, could that change in 2 months, 4 months, 6 months? It could, because financing costs are going to be coming down, I believe. And I think Pete does too, because we've already had a 0.5 point cut. We're going to see more cuts next year. But if you're one of those auto manufacturers and you're not seeing the demand right now, what can you do, Pete, other than cut prices?
Right, cut prices. And I think one of the moves that we've seen some of these big auto manufacturers, whether it be Ford or GM, and by the way, Morgan Stanley, Jonas has taken back, he's pulled off a little bit some of the price targets and what, his general feel for both Ford and GM. But let's be honest, GM has been on an absolute phenomenal run to the upside. You go back to late November, it was up over 80%. As a matter of fact, the stock got all the way up to $50 a share. And right now, even though it's gotten hit a little bit here and a little bit there, John, it's trading $45 last I looked. So a really nice chart when you look at this one. They've done a lot of things right. I think it's impressive what they've been able to do. And I think it's because of the fact that they've had that mix of gas. That's certainly something that I think is going to be beneficial for them, at least for the next 5 years. And I think a lot of people they jumped on this whole thing about it's all about EVs. Well, it's interesting. It's certainly something that can be talked about, but I don't think we're quite there yet. And I think it'll still take some time. And I think that's what we're seeing play out right in front of us right now, John, is it does take time. By the way, GM has done a great job with the stock share buybacks as well. So between the buybacks, the fact that they still have the gasoline units, that is what they lean on. They've pulled off of some of the EVs to some, in some ways. So I think when we really look at this name, I like it. I think on the pullbacks, it might be something to keep an eye on, John, because especially with the fact that you just brought up at the very end of your commentary with GM, hey, with rates getting cut, that's going to help them sell cars. And I think that's a big factor right now.
Well, and let me give you guys just a quick insight before we move on. If you look over the last year, like Pete said, GM is up 36% year over year. Ford is down 15% year over year. And Stellantis is down 28% year over year. I mean, it's been an ugly year. If you only look at this calendar year, Stellantis is down 41%. Ford is down 13%, and GM is up 25%. So whatever GM's selling, Pete, they're selling a lot more of them than Ford and Stellantis. And I must say, a lot of their vehicles, I know you're an F-150 guy, and I've never owned a GM truck, but I think a lot of their other vehicles are very popular, and I don't think Ford and Stellantis have anything that's hyper competitive against them in those.